Hi everybody, Tom Gile with the Gile Group. Today is Friday, July 31st, bringing you this week's Gile Report. Hey, we've got a great show scheduled for you this week. Last week we were talking about Susie Ortman's housing projections and how they really differed from the reality of what's going on in the housing market. The economy is really dominating the headlines this week. The federal government put out the Q2 gross domestic product numbers or GDP numbers on Thursday, grabbing headlines all of Thursday afternoon. So we're going to take a look at what goes into the GDP, what it means for the economy in a big picture, and how it relates to the housing market. So again, like I said, we've got a great show scheduled this week, so let's get started. Taking a look at the Q2 GDP numbers, I don't think anyone's really surprised about what we're seeing here. GDP was down 32.9% compared to Q1, but not a big surprise given what happened to the economy in the months of April, May, and June. So obviously with the shelter at home and a lot of companies shutting down or pulling back, it had a very large impact on the gross domestic product. So let's take a look at what goes into the gross domestic product. Gross domestic product is made up of a number of factors, including personal consumption spending called PCE, along with exports, private inventory investment. I'm not going to read all these items here, but a number of things go into the GDP calculations. And some of the big things that impacted the decline in GDP had to do with decreases in services by healthcare and goods, both clothing and footwear, as consumers spent less money during the months of April, May, and June. It's also important to note that there's a decrease in housing investment, especially early on. And if you remember over the last month or so, actually a couple months, we've been tracking housing sales, and we know early on in this pandemic and slowdown, housing sales dropped off and now they're coming back up. So it definitely had an impact on the GDP. So let's dissect these in some more detail here and take a look at what's going on, because really I think the announcement of the GDP lagging in Q2 really is a lagging indicator at this point in time, because we're already starting to see some recovery. So this graph does a great job of showing it. Again, looking at just what happened to consumer spending over the months of Q2 and into July, which is the first month of Q3. Taking a look at April, consumer spending really kind of fell off the cliff. It was down 31.7%, but we're showing some continued climbing of consumer spending, and this is all indexed back to January of this year. So we're seeing a very positive trend on consumer spending and this consumer sentiment. Let's take a look at where consumers are spending their money during the pandemic and as we're coming back out of it. And you also know that for months we've been talking about this thing called a V-shaped curve. We definitely are seeing some V-shape here on just these different types of spending activities. The one area that really gained during this whole period of time is groceries. Areas that took the biggest hits down here are transportation, arts and entertainment, restaurants, taking some of the bigger hits here. We're definitely seeing some rebound in areas like apparel and healthcare. If you remember, apparel and healthcare were taking a big chunk of the drop in GDP for Q2, and we're getting back to a point where we're getting back close to being back on level with apparel and healthcare. So seeing some good gains in those areas that were really dragging down the GDP. Interesting graph here talks about consumer savings. Interesting to see it laid out this way. About 63% of the people said, yes, I'm saving money as shelter in place was going on. Some people weren't. About 25% said, no, I'm earning the same, but I'm spending more money. I think the area of concern that you need to look at here is the people that are spending less, but their income has dropped. And look at that. Obviously, this is a tough situation for people in this situation, but it's only 12% of the makeup of this study. So let's switch gears here and take a look at how this all fits in with the real estate. So it's a great graph here, just talks about showings in North America. We've been talking for a month or so now about what's going on in Portland. This graph just really shows that Portland is mirroring the nation in what's going on in terms of showings. We'll compare this to what's going on in the Portland, Oregon area. So these two graphs are laying them out side by side here, and we're seeing very similar numbers. You've been seeing these for weeks now as we've been presenting them, but timing is almost identical as Portland crossed that threshold of being positive again in terms of just a number of showings starting in mid-May, continuing to climb, and we're just seeing continued growth in the showings of homes here in the Portland area, which is a great leading indicator of pending sales and ultimately sales. So speaking of pending sales, let's take a look at this. We'll look at both the nation as a whole and Portland specifically. Um, this graph here looks at purchase applications, which is basically pending sales. It shows that pending sales, dropped off mid-March, continued to be low, and then climb as we got into mid-May and are very robust from mid-May on. And we're really seeing the same thing in our local market here. So just keep in mind what this is. This is showing, indicating what sales were year over year. So what were we doing in 2019 versus what we're doing in 2020? And you can see since about mid-May on, we're far surpassing both as a nation and in Portland sales compared to 2019. I want to switch gears a little bit here. Let's talk about unemployment. This is an interesting graph, and I want to point out a couple things in here because you have to be very careful when you read this graph. So when you look at this graph, just know that this yellow line here or the yellow bars, it's a cumulative number. That bar will never go down. The best it can possibly be is flat, which means there are no new applications. What's important to look at is the currently collecting unemployment, which is in the blue, which shows that we had a peak of unemployment collections in early May, and we're seeing that number continue to decline through time here. So, we're getting a spread here from about 51 million people have applied for unemployment to 16 million are on unemployment. Keep it in mind when you may see those eye-popping headlines that talk about 51 million people unemployed. That is just not the case. Another thing that's I think probably a lot of homeowners' minds, especially the people that have been impacted, that are on unemployment or have their jobs have been impacted, they may have put their mortgages in forbearance. And so let's talk a little bit about forbearance. Forbearance is allowing you to skip your mortgage payments for a period of time. And there's periods of time where you can put your loan in forbearance, but that loan ultimately has to come back out of forbearance at some point in time. So looking at the number of mortgages in forbearance, the good news is that we're seeing a decline of the number of mortgages in forbearance over the last 3 weeks now. So more and more loans are coming out of forbearance as people are getting back to work and are able to get back on their feet. So that's great news. And I just want everyone to know too, there are alternatives to foreclosure after forbearance. We talked about this last week a little bit with Susie Ortman. She was really kind of spreading the news that, boy, once these loans, the forbearance goes out, people are going to be, the banks are going to be foreclosing on people's homes. Remember, first of all, people have 180 days after they've applied for forbearance, whether their loan will still be in a forbearance state, which they can even extend for another 180 days. So almost a year they've got protection there from foreclosures. But so there are options here. One option obviously is to extend the forbearance, which is what I just talked about, extending it another 180 days. A second option that people have when their loan is in forbearance is modification of their loan. And what they'll need to do is talk to their lender to see about modifying the terms of their loan, and basically instead of having to come up with a lump sum number of the payments that you did not make while you were in forbearance, you basically are going to recast your loan. Ultimately, if neither of those work, you can sell your home. And most people are in a positive equity situation with their properties. As we've seen through time, we've seen so much market appreciation over the last years that people that are underwater in their homes are very limited. So selling their home is always an option too, to get out of a forbearance situation and avoid foreclosure. So what's the bottom line here? There continues to be a lot of fear and misinformation as it relates to the economy and how it can negatively impact consumer confidence. People hear things about just the GDP being down and they may pull back from spending. Again, let's put it back in perspective. Take a look at what that really means. The GDP is definitely down, but we already are seeing trends up in the areas that make up the gross domestic product. So we're seeing positive trends on what's going on and consumer spending. Unemployment is high, but it's trending downward, as we just talked about here. The real estate market, buyer activity, and home prices remain very strong. So housing is remaining very robust during these periods of time here, and in a lot of ways is helping pull our economy out of the situation that we're in. The wave of foreclosures due to unemployment and forbearance is not cresting. We're not seeing, nor do we expect to see, a wave of foreclosures for just the reasons that I spoke about here a little bit earlier, that people have tools and options before things get to foreclosure. If you know anyone that may be concerned about their loan that's in forbearance and just what they need to do and what their options are, we'd love to talk to them. Happy to talk to them about what their options are there, and that way they can make the best plan possible for them in their current situation. Any questions in general about the economy or the housing market here in Portland? Again, we'd love to hear from you too, so please reach out, and remember, ask the Gile Group.